Should investors be worried about Turkey?
Well, you know what? This morning, one of my colleagues says, why the heck should I care about Turkey? And I got to say, it's one of those questions that is very difficult to answer. Let me back up and say nobody wants to see anybody's currency implode. Nobody wants to see anybody's society go through that kind of internal turmoil that they're going through. But it's happened, so let's deal with what's here. The problem you get is, unless you're a Turkish citizen or a Turkish bondholder or own assets in Turkey, realistically, the day-to-day goings-on in the Turkish lira and the Turkish economy don't concern you that much. And to most people, and I'm naturally reflective of a North American audience, but this probably applies reasonably well to people in Europe and most of Europe and Asia. Unless you're holding those assets, in some way, shape, or form, it's really happening outside of you. That's a short-term answer. The longer-term answer is, I don't know whether we should be worried about Turkey or not. And a lot of times you don't realize this stuff till much later on, because the problem isn't necessarily the first-order effect, it's the contagion. And let me explain what I mean by that. We don't necessarily know who is over-levered in Turkey. And are there foreign banks or other entities that might get themselves into trouble in Turkey? Or are there margin controls that start to come up that affect other levered players? I think back to the Thai baht crisis and Russian ruble crisis of the late 90s. And what ended up happening wasn't so much the initial effect, but as you started to unravel all this, you found later on that long-term capital management had these over-levered bets on what appeared to be very stable relationships, arbitraging, what seemed to be easily arbitraged situations with incredible leverage, except that because of the effects of these emerging market currency crises, the one side or the other acted in a way that they weren't expecting, and the leverage they were carrying was too great, and that spread through the system. So that's the problem why markets tend to freak out when they hear about these problems in emerging markets. Again, the effect on a Turkish citizen, I certainly don't want to speculate how that affects them. It's probably incredibly negative. By the way, there's one other lesson, just as an aside. If you live in a country that really is forced to pay its debts in currencies that it can't control, and by that I mean Turkey, by that I mean Argentina, by that I mean Brazil, if you have plenty of debts denominated in other currencies, and to a certain extent this was the case in Greece, where even though the debt was denominated in their own currency, which was the euro, but they really had no effective way to control the mechanics of the European Central Bank unilaterally. So effectively they were borrowing in a foreign currency. If you're in one of those countries, as much as people in developed economies don't necessarily see the need to own gold. And the reason I say that is, people look at gold and go, well, gold in US dollar terms is just meandering, moving slightly lower. If you own gold and your terms are Argentine pesos or Turkish lira right now, that's probably your best asset, as essentially that's your link to the outside world. So I don't know, each country has different rules about such a thing, but when people always ask, why should I own gold? That's one of the reasons you own it. Not necessarily if you're watching this from a country, let's say the U.S. or Canada or Japan or someplace like that. That's more meaningful if you're in an emerging market economy that borrows in other currencies. So that's really what it comes down to, is we don't know yet what's going to happen. The initial speculation, the initial worry was in European banks, and Deutsche Bank sold off. Deutsche Bank always seems to be in the middle of one of these things, just because of their breadth, and because of the major economic and social ties between Germany and Turkey. People fingered Deutsche Bank as a suspect. I have no reason to believe that they are or not excessively leveraged at this point, but that's what people start to look for. Is there contagion? is there another shoe that's going to drop? And usually when those other shoes drop, it's in the most random of places. So that's what you should be keeping an eye on with Turkey. That's also what you should be keeping an eye on is, why other emerging markets tend to underperform, because it tends to be the same investor pool. So if I'm investing in all these emerging markets and my investments are woefully underperforming in country A, I might be looking to sell them in country B just to raise money, and that's how these things spill around the world. So the short answer to a complicated question is, should I be worried about Turkey right now? What does it mean? Right now, it's a watch and wait. And you could see why the markets get nervous over something like that. We haven't really seen any reason, at least at the time we're taping this, to see where that contagion moves into developed markets. But boy, you got to watch this space very carefully, because you never know when or if this is going to happen. And when it does, it happens quickly and in a nasty way. So watch for not only the first order developments, but the second order developments, and trade accordingly.